Assalamualaikum and a very good day everyone. My name is SUFHEA binti MAZLAN and today our group will conduct a presentation regarding the financial review program for Maybank Berhad. First and foremost, let me introduce my group members. Beside me is NURDANIA HAZWANI binti ZAKARIA, Mohamad Afiq bin Muhammad KAMSUL and NABILA binti AHMAD. Before we do further into Maybank's financial performance, let me tell you more about Maybank. Maybank was established in 1960 and today is the largest financial services group in Malaysia. Maybank is ranked first among its emission companies and among the 500 companies in the world. Until now, Maybank holds admission to human as financial service across Asia and providing access to financial services to the people at fair terms and pricing and to be always at the head of the community. Now I'm going to explain about the factors to consider having a segment reporting. There are 3 factors to consider having a segment reporting. First is of course the nature of the business activities. As we know, Maybank is known as the largest financial services group in Malaysia. Second, Maybank segment is managed by their own manager who are responsible for the overall strategic growth and profitability of the segment across the region. Their manager also will be the middleman to deal with the chief operating decision maker. Third, will be the information presented to the board of directors. The chief operating decision maker may refer to the reports evaluated by the board of directors since they include valuable insight about the entity's performance and growth. For instance, financial statements that provide complete information to the board of directors, allowing them to make better decisions by analysing the segment. Maybank divide their business into 4 segments. The first one is Group Community Financial Services. It is comprised the full range of product and services that offer to individual retail, SMEs, and mid-sized corporate such as consumer banking and business banking. Second, Group Global Banking. It comprises full range of order and services offered to large corporates and institutions such as Group Investment Banking and Group Asset Management. Third, Group Insurance and Takaful. It comprises the business of underwriting all classes of general and all life insurance business, offshore, investment, life insurance and family takaful businesses offered to individuals and corporate. Fourth, Group Islamic Banking. It comprises product development, business strategy, risk and Sharia compliant management for region expenses as well as overseas franchise. Maybank also provides a full array of conventional Sharia compliant commercial banking, investment banking and insurance products and services in 18 countries, including 10 Asian countries with Malaysia, Singapore and Indonesia contributing their highest operating income. Maybank also present in international finance centers such as New York, Dubai and Hong Kong. Moving on to the Chief of Decision Making, CODM, and its responsibilities. CODM is an individual or group of individual that is responsible for the allocation of resources and assessing the performance of the operating segments. Since 2nd August 2013, Datuk Sri Abdul Farid Alias has served as the Group President and Chief Executive Officer. He is in charge of the Maybank Group's overall business growth management and as well as ensuring the long-term value is delivered to shareholders, customers, workers and other stakeholders. He is also responsible for communicating on behalf of the company to the shareholders, government entities and also the public. For each segment, you will be directed by their own Group Chief Executive Officer. The first one is Datuk John Chong Eng Chuan as the Group Chief Executive Officer of Community Financial Service. Datuk Muhammad Rafiq American Muhammad Wahiduddin American as the Group Chief Executive Officer of Islamic Banking. Datuk Mazafar Hisham as the Group Chief Executive Officer of Global Banking. And Datuk Kamaluddin Ahmad as the Group Chief Executive Officer of Insurance and Takaful. With that, I can conclude that management approach provides a transparent understanding of performance and forecasting companies which grow through an internal management structure. This statement goes along with the core concept of MFRS 8.
Let's move on to the next topic, which is the process to identify the reportable segment and non-reportable segment. Based on MFRS 8, We can identify the reportable segment and non-reportable segment, where an entity is required to use a certain amount of judgment in determining the operating segment of the company by conducting 10% threshold test and 75% test rule. Not all operating segments need to be separately reported. Operating segments are only required to be reportable if they exceed quantitative thresholds. Operating segment that does not meet the 10% threshold requirements are to be combined and disclosed under all other segments category. For reporting purpose, a reportable segment is one that meets any one of the following quantitative thresholds, which is revenue basis, profit or loss basis, or asset basis. For our report, we use the revenue basis. It's reported revenues from sales to external customers and inter-segment sales and is considered a reportable segment if there is a 10% or more of the combined revenue of all of the operating segment. So here is the segment revenue as reported in Maybank Berhad annual report. According to the calculation of the revenue basis, after performing the 10% threshold test, there are only 3 reportable segments identified, which are Group Community Financial Service with 58.4%, Group Corporate Banking and Global Markets with 34.5%, and Group Insurance and Takaful with 11.4%. Since Group Investment Banking, Group Asset Management and Group Head Office and others do not reach the 10% threshold requirements, it will be combined together and disclosed as all other segments categories in segmental reports.
After reportable segments are identified, reportable segments must at least and over 75% from total external revenue. If reportable segments do not meet this requirement, additional segments must be identified as reportable segments, even if they do not meet the criteria of 75% rule. Okay, now we will focus on this slide. It provides that after performing the 75% tax rule, the reportable segments of Maybank Berhad are 104.39%, which exceeds 75%. Therefore, we will proceed as there is no additional segment to be reported. However, in order to have at least 4 reportable segments and 1 non-reportable segment in Maybank Berhad, we have to make an adjustment of the operating segment as presented in this slide. There are 2 additions of segments, which are shareholder units and other group segments. These additional segments have fulfilled the conditions where there are 4 reportable segments and 4 non-reportable segments. As a result of the adjustments of adding the new operating segment, it will change the reportable status. Therefore, the new reportable segments are Group Community Financial Services of 40%, Group Corporate Banking and Global Markets of 23%, shareholder units of 22%, and other group segment of 10%. However, in order to have at least 4 reportable segments and 1 non-reportable segment in Maybank Berhad, we have to make an adjustment of the operating segment as presented in this slide. There are 2 additions of segments, which are shareholder units and other group segments. These additional segments have fulfilled the conditions where there are 4 reportable segments and 4 non-reportable segments. As a result of the adjustments of adding the new operating segment, it will change the reportable status. Therefore, the new reportable segments are Group Community Financial Services of 40%, Group Corporate Banking and Global Markets of 23%, shareholder units of 22%, and other group segment of 10%. Segment reporting certainly has its pros and cons. I will explain its benefits first. First, segment reporting will help better understand the entity's past performance a little better because you are able to identify loss-making segments and identify the more profitable segments and many more. Second, it helps user better assess the entity's risk and returns of each particular segment. Therefore, we are able to form decisions such as disposing of the investments and investing elsewhere. Lastly, It helps users make more informed judgment as a whole, as it shows the internal view of the entity that helps the user make wise decisions in terms of investment decision and financial decisions, and of how well the entity is going into the future. Now for the disadvantages. First, it is time-consuming process since there are many requirements to follow to disclose the segmental reporting. Second, the data can easily be misinterpreted by investors or creditors. Operating data are meant for internal management users. Therefore, external users may face some difficulties in understanding when making investment decisions. Lastly, the cost of gathering data can be extremely high than benefit. All information such as revenue and expenses may incur a lot of cost and may overpower the benefit.
Okay, right now I will continue the presentations about the topic MFRS 134 interim reporting. Okay, for the basis of preparation, this report have been prepared under the historical cost except for the following assets and liabilities that are stated at fair value. The second one, it also comply with accordance with the requirements of Chapter 9, Part K of the listing requirements of Bursa Malaysia Securities Berhad, MFRS 134 interim financial reporting, and IAS 34 interim financial reporting. The report also are consistent with those adopted in the most recent audited annual financial statement for the financial year ended 31st December 2021, except for the adoptions of the following amendments to MFRS. A lot of accounting policies are used in the interim report. If I want to highlight two of it, the first one is MFRS 138 intangible asset. Okay, as you can see, the table shows the summary of the policies applied. Okay, intangible assets are measured at cost less any accumulated amortization and any accumulated impairment losses, except for the software in development. The useful lives of intangible assets are assessed either finite or indefinite. Intangible assets with indefinite lives are not amortized but are tested for impairment annually, while the intangible asset with finite lives are amortized over the useful economic life and accessed for impairment, whether there is an indication that the intangible asset may be impaired. There are 5 types of interim report, which is the first one, unaudited condensed statements of comprehensive income, unaudited condensed income statements, unaudited condensed statements of financial position, unaudited consolidated statements of changes in equity, and the last one is unaudited condensed statements of cash flow. The second one is MFRS 116 property, plant and equipment. All items of property, plant and equipment are initially recorded at cost. The cost of an item of property, plant and equipment is recognized as an asset if and only if it is probable that future economic benefits associated with the item will flow to the Maybank and the cost of the item can be measured reliably. All items of property, plant and equipment are measured at cost less accumulated depreciation and accumulated impairment losses, if any. As you can see in the table, freehold land has an unlimited useful life and therefore it is not depreciated, while the leasehold land is depreciated over the periods of the respective leases, which ranges from 30 to 999 years. Depreciations of other property, plant and equipment is computed on a straight line basis over its estimated useful life as shown in the table given. Okay, right now let's go to the current and comparative period for each statement. Okay, for the unaudited statements of financial position, the reporting period for current interim is 3 months, which is from 1st April 2022 until 30th June 2022. While for comparative period, end of year is 6 months from 1st January 2021 until 31st December 2021. Okay, for unaudited statements of changes in equity and also statements of cash flow, the reporting period for cumulative year-to-dates are 6 months, which is from 1st January 2022 until 30th June 2022. While for the comparative period, year-to-date are also 6 months, which is from 1st January 2021 until 30th June 2021. Okay, for the last one is unaudited income statement and comprehensive income. The reporting period for current interim is 3 months, which is from 1st April 2022 until 30th June 2022. For cumulative year-to-date is 6 months, which is from 1st January 2022 until 30th June 2022. For comparative current interim are also 3 months, which is from 1st April 2021 until 30th June 2021. And for the last one is comparative year-to-date also 6 months, which is from 1st January 2021 until 30th June 2021.
In this slide, I will show the effect of the first adjustment. The first adjustment is related to transfer of assets. On 31st June 2021, the fair value of the building used for administration purposes was 8,500,000 ringgit. On this date, the building was rented out to non-related organizations. From here, we can see that the building has changed its use from property, plant and equipment to an investment property. Therefore, it will increase the investment property by 8,500,000 ringgit, and we will write off the property, plant and equipment by 8,500,000 ringgit. Before the adjustment, in the current interim column, the amount disclosed for the year ended 31st June 2021 for property, plant and equipment is 1,543,979,000 ringgit, while investment property is 175,980,000 ringgit. The first adjustments will reflect the amount of PPE and investment property in the current interim section. Therefore, the amount disclosed after the first adjustment for PPE is 1,526,479,000 ringgit, while investment property is adjusted to 184,480,000 ringgit.
Next is adjustment 2. On 1 January 2018, Maybank Berhad has bought a plant and machinery costing 1 million ringgit Malaysia. Its accumulated depreciation at that date amounting to 350 million ringgit Malaysia. The plant and machinery is depreciated at 10% per annum on a straight line method yearly basis. So, the journal entry for this transaction would be debit depreciation 400,000 ringgit Malaysia and credit accumulated depreciation 400,000 ringgit Malaysia. So, before the adjustment, we can see that the amount of the property and equipment is 1,534,979,000 ringgit. And after deducting with the accumulated depreciation to the amount of the property and equipment, the amount has decreased to 1,184,579,000 ringgit. That's all from us. Thank you.